Hey y'all, today I'm diving into the latest market mayhem and what it means for us investors. So grab your coffee and let's break it down. On Friday, the stock market took quite a tumble. We're talking about the Nasdaq Composite, Dow Jones Industrial Average, and the S&P 500 all seeing substantial losses. The big trigger? A weaker than expected jobs report for July. Now, here's the kicker. The Nasdaq dropped more than 10% from its recent peak, officially entering correction territory. And it's not just the tech stocks feeling the heat. Bank stocks like Bank of America and Wells Fargo also took a hit, dropping 4.9% and 6.4% respectively. The jobs report showed only 114,000 jobs added last month, way below the expected 185,000. Plus, the unemployment rate ticked up to 4.3%. Investors are understandably spooked, seeking refuge in bonds. This led the 10-year Treasury yield to its lowest since December. But wait, let's hear from the experts. Adam Turnquist from LPL Financial believes this is just a natural correction in a bull market, and not the end of the AI boom. Meanwhile, Claudia Sahm notes that while recession signals are flashing, the U.S. isn't in a recession just yet, but we're on a concerning path. Byron Anderson from Laffer Tengler Investments thinks the Federal Reserve should start cutting rates to stabilize the market. At the current 5 3/8%, he says it's too restrictive given the low inflation and labor market conditions. Among all this chaos, some sectors are holding strong. Utilities emerged as a safe haven with a 4.15% gain for the week. Investors are flocking to defensive sectors amidst the turmoil. However, not everyone is weathering the storm well. Amazon stock plummeted by 8.8% after missing revenue estimates and issuing a disappointing forecast. Intel wasn't spared either, suffering a 26% drop after weak guidance and layoff announcements. And let's not forget about oil. U.S. crude oil prices fell more than 3%, hitting their lowest since early June. The fears of a U.S. recession overshadowed even the geopolitical concerns in the Middle East. So, what's the takeaway? The market's in a state of flux, and while some sectors are showing resilience, the overall sentiment is cautious. It's essential to stay informed and consider diversified strategies in these uncertain times. All right, folks, that's all for today's market update. If you found this video helpful, smash that like button and subscribe for more insights. Stay savvy, and I'll catch y'all in the next one.